Hey folks, welcome back to the channel, and it's that time again where super investors have to disclose what they bought in the recent quarter. So we're going to take a look at the top 10 companies that were picked up by large fund managers. And here they are. Not a big change from the previous quarter. We have Microsoft, Meta, Google, which appeared twice, so I'm just counting it as one company. Amazon, Visa, Booking Holdings, Salesforce, PayPal, Disney, and Micron. I think it's good to at least know what super investors are putting their money in because it can give me some ideas of maybe these companies are worth looking at for my own portfolio. Now, it's a little misleading just to look at this list of the most bought stocks because it doesn't show me how many super investors sold out of these companies in the last quarter. On the website dataroma, which I've shown before, not only does it tell you the top companies that were bought in the last quarter, but it also shows which companies were sold the most. And we can see that for the list of the most sold stocks, there's a lot of overlap between this list here and the stocks that were bought. So what that means is, for example, for Microsoft, during the most recent quarter, yes, there were like 13 investors who added or bought the stock, but there were also 12 super investors who got rid of the stock. Now, they could have sold for different reasons, but this doesn't give me as much confidence as, say, a stock that has mostly been purchased and not a lot of investors sold out of it. Even with a company like Disney, in the last quarter, there were about as many people who bought it as people who sold it. So the way I like to interpret this website and this kind of information is to try and find stocks where there is more consensus among the super investors. And when I look at it that way, only 3 companies on this list seems to fit that category. And those stocks are Booking Holdings, Salesforce, and Micron Technology. So I'm going to talk about these 3 stocks today because I don't think I've talked about them much before, and try to figure out why large fund managers are more interested than not in these 3 companies. Okay, let's look at Booking. This is a cyclical stock that allows people to book like cars, restaurants, hotels. You've probably heard of some of their websites: Kayak, OpenTable, Priceline, Booking.com, of course, rentalcars.com, and they have grown a lot over time. The analysts are giving this a average target of 2,300. So that's an 18% upside from where the stock is today. That's not huge. A broad-based market index fund might get you 18% return over the next year. But essentially what you're buying with Booking is consumer confidence for the next year or so. Because this is a consumer discretionary stock, if the economy slows down a lot next year and consumers are in trouble, then stocks like this would probably not do very well. In terms of the fundamentals of the company, I think it's a great business. The revenue per share has been growing year after year. The EPS is really good up until 2020, but it looks like they're recovering quite well. I also like that the company's shares outstanding is decreasing over time, providing some extra value to shareholders. So overall, at a forward PE of 16, I think this stock is okay to buy right now. It's not expensive, but it's also not cheap. And when you look at the price of the stock, it's a very highly priced. So you're not going to buy like 100 shares of this, which means when it comes to options, it's a little bit tricky. The other thing is looking at the technicals of this stock. It is a very choppy chart. If you look at some of these days, there are these huge gaps in between, and a lot of the time it's not even during earnings. Like over here, huge gap down, and then we had a gap up over here, gap up. So it's a very volatile stock, and it certainly might be worth trading this one. It's not something I would do because the price of the stock is so expensive, but I would definitely be careful with this one. It looks like it does have some kind of pattern: down, up, down, up, down, up. Most likely it's going to come down based on what's been going on over the past year. So I would be careful about going long right now. If I take a look at the weekly chart, a quick way to know if this is a good time to go into a stock is to look at the blue line, or 21 moving average. In this case, this is the weekly moving average. Looks like it's been going down for a while and it's just flat right now. Over this past year, it looks like it's having trouble getting over this blue line. Whenever it goes over the blue line, it kind of drops down below it again. Over here as well, drops down over here, and then drop down over here, drop down. Same thing a couple months ago, and right now we are here. So we're over the blue line, but what's going to happen now? Is it going to drop back down? Most likely, yes, unless the economy dramatically changes or something else happens that would, instead of dropping down, it would bounce off the blue line and go higher. Now, it'll have to go past this line over here because that was a previous swing high, before I would say this is on a more sustained bullish trend. So right now I would be careful with this just because it's very unpredictable, the swings of this stock. But if you're bullish on the consumer and you have a long-term time horizon, then maybe buy like half a share if you can, or one share, and dollar cost average in, because if I look at this on a, let's go to the monthly chart. So each bar represents a month, and you can see now the blue line, the 21 monthly moving average, is overall going up. Now, at this point, we are coming down, so you could wait until this goes flat, or at least the bars start to go over this blue line before getting in. Let's move on to the next one, which is Salesforce. This one is quite interesting looking at the super investors' activities. The previous month in second quarter, there was a more even mix of buyers and sellers, and that was between March to June. Now, from July to September, which is Q3, the most recent quarter, there were a lot more investors who bought it than sold it. So it seems to be that it's trending that more super investors are piling into this stock. Now, I'm not really sure why that is. My best guess is after looking at CRM's most recent earnings, they still seem to be growing and somewhat resistant to a slower economy and tech companies laying off people. So basically, what Salesforce does is provide CRM services for customer management to other businesses. So it's like a cloud company that has a lot of different products for analyzing and sorting data. Looking at the tips ranks ratings, this is a strong buy with the average target being $218 and today's price is $148. So that's like a 48% upside with the medium price. Fundamentals are very solid, revenues growing pretty much every year, even right through 2020, 2021, and also this year. There has been pretty much no slowdown despite what's been going on over the last few years. Free cash flow per share also steadily growing ever since 2007, so that's really good to see. The company has grown at about 27% every year in the past 5 years, but it's expected to slow down to 19% next year, and then over the next 5 years an average of 15%, which is still pretty good. And that's why the forward PE is not very low, it's at 26. I think out of all the tech companies, this is probably one of the safer ones to be in, as long as you have a 3-year time horizon or longer. Short term, it's not bad either. If we take a look at the daily chart, you can see CRM basically crushed earnings every time for the last few years. And the stock has a really nice support down here. And if I draw like a channel connecting the bottom dips, you can see we're pretty much right there near the lows of this channel. If I move up to the weekly chart, you can see it's been holding pretty well. Every time we drop down to the bottom of this channel, we get a bounce. Now this blue line here is a little bit concerning because it is still coming down. So because of that downward pressure, we might see a wedge pattern forming over here, and eventually something will have to give, and we could chop like this, break down before coming back up. So again, with any technology stock, you could see a lot of volatility. So that's why you never want to put all of your money in at once. Like if you want to spend like $1,000 on this stock, then maybe buy like $300 now. And if we get a bounce from the support and we go higher, then you want to buy another 300 and then maybe eventually another 300. But if it drops all the way down here, then you might want to pick up maybe $500 worth of shares and go a bit more aggressive, because long term, it is very likely that Salesforce will continue to grow its free cash flow and its revenue. And that's what makes this a strong company and why the stock price is expected to go a lot higher than this if you wait out any choppiness in the short term. If I look at the log graph and go to the monthly chart again, because again, this gives us a better overall picture long term. But you can basically see from the very beginning, it's pretty much been in this channel going up. Right now, we're near the bottom of the channel. So in terms of the downside, unless the company does something it hasn't done in almost 20 years, somewhere around this line should be the lowest the stock price should go, barring any catastrophic events. And if that were the case, you're looking at a downside from 148 to 118. That's a $30 downside if you buy one share. But look at the upside. If you just wait for like 1 or 2 years, each one of these bars represent 1 month. The stock could come down and reach this bar, maybe not, maybe just bounces from here. But look at where that upside is, $600. Now, most likely it's not going to go up that high, but even if we go midway up this channel, that's still going to be over $300. So you're looking at a doubling of your money, like $150 gain potentially, and a $30 loss. Now, the stock has been above the middle line for most of its history, so there's no reason to think that, for the next 5 or 10 years, it's going to trend below this middle line. So this to me long term is a pretty good risk to reward investment, and I would certainly think about entering at this price. And if it goes down more, then I would buy more of this stock. And the way I'm buying this one is through options. I'll just give you an example. This is looking at the option chain for CRM here. And what's nice about this particular name is that it has weekly options. So if you have the time to trade options every week, then this could be something you can consider. But otherwise, you can just use monthly options. So let's go with monthly options because that's probably easier to do. Let's say the December 16th expiration, which is about a month away. And if I were to place a line, let's go to the daily chart. If I place this line on December the 16th, where the expiration is, that's over here. And I basically ask myself, where can this stock fall to? Well, we have some supports over here. This one's at 122. Just looking at the previous couple of years, it looks like the stock does not want to fall below that. When it did in the past, it just bounced off of this level, and we basically saw this V-shaped recovery over here. Over here, over here. So if we do get a really aggressive down move like that, I do expect it to have another V-shaped recovery. Now, it might not, but that's why I'm investing a little bit at a time. So anyway, this level here is 122. So if I look at the option chain on this date of expiration and I go to 120, well, let's go to 125 and we can see this is a 1.1 standard deviation. So the easiest way is to just sell this 125 leg, click on sell and pick a price. Looks like I can get about $175 US for this, minus some commissions. So every month that the stock does not go below 125, then I would receive $175 US and nothing else would happen. Now, eventually, maybe the stock will fall below this line, in which case I would just own 100 shares of this stock, and I would still collect the 175 premium or whatever price the option is selling at that time that I make the trade. So short term, I'm not sure what's going to happen to this stock, but I do know that long term, this is going to be a very good investment if somebody buys this at today's price. And the last stock we're going to look at is MU. And similar to Salesforce, it seems like over time, these super investors are warming up to the idea of this stock. Now, in the first quarter of this year, for some reason, this stock was not liked by anyone, and 3 super investors reduced their positions. But the next quarter in Q2, you can see that more investors are now buying this stock instead of selling it. In fact, this Yachtman Asset Management, which sold a little bit of their holdings, just 3,000 shares in the previous quarter, basically added those shares back into their portfolio in the second quarter. And not only that, but in the third quarter, they added additional shares, a lot more actually than the previous quarter. So you can sort of see the story over here over the last year or so is that more super investors are gravitating towards liking this stock. I'm not sure what's happening here exactly, but I think there could be something that they're seeing that a lot of people aren't. Now, Micron Technology is a chip maker, so it is going to be like one of those stocks where it's going to be quite volatile because you have supply chain risks, commodity risk, and it's a very cyclical industry to be in. Let's look at the fundamentals first. It seems to be going pretty well. Revenue overall, the trend has been growing, even though it's slowed down over the last few years. You can see this year, basically the revenue is just a little bit higher than in 2018. Free cash flow was doing really well, but it seemed to have stalled now. Looking at the return on invested capital, this is how efficiently management is using the money to grow the business, and it seems to be doing okay. In recent history, other than 2020, it looks like it's been in the double digits. I guess this is a play on the chip making industry and broader technology advancements in the economy. Because they make computer memory and storage solutions, as long as you believe people will be using more cloud storage or any kind of storage and technology in general, then this is probably going to be a good long-term hold. Especially the forward P is not that high right now at only 16. And the current P is below 7, which is really low. And just like with other technology stocks, I've mentioned this before, it is going to be volatile. If you look at the PE ratio on average over the years, it's been negative 27, positive 48, there's a negative 53, which means negative earnings for that year, 15 times last year, and now we're at single digits again. So 6.7 PE would not be considered expensive for this stock. It also has a small dividend yield of just under 1% if you care about that. Finally, we'll look at the technicals of this stock. So on the daily chart, we have this nice rising support line over here. This goes all the way back to 2016. So looking at this chart, it would make sense to buy a little bit right now because right now it's close to this blue line. In the past, the stock likes to be a lot higher than this line than where it is right now. So during the lows of the market a couple of months ago, Micron came down, reached this blue line, had a nice rebound, came back down to retest this EMA here, bounced off of that, and now we're over here. So what's going to happen next week? Hard to say. This line here represents where earnings are going to come out, so that is something to watch for. And if after earnings it stays above this straight blue line, then most likely the bottom of this stock is in and we are going to head higher. So those are some of my takes on the 3 most bought stocks by super investors that have a generally favorable consensus. Hopefully you found this video useful and it gave you some ideas on where to invest your money next. Feel free to browse around the Dataroma website yourself. Maybe you'll find some nuggets in this most recent quarter there. I kind of broke down the website if you want to see what all the different stats are over here in my previous super investor video. Anyway, good luck with your investments and I'll talk to you in the next one.